I wanted to focus some of my discussion on the power sector. I wish I could speak more on the water sector, but unfortunately there's not enough water projects, or at least bankable water projects across Africa. So unfortunately we haven't done any water project in Africa, so I will have to still focus on the power sector. So Frontier Markets Fund Manager, who we are, in short we call ourselves FM, and we are not, I can reassure you, a radio station. We are a fund manager. We manage two funds, $1.1 billion under management. And we have two funds. One is the Emerging Africa Infrastructure Fund, which I left some information on the tables to this morning. So I'll be very brief what the Emerging Africa Infrastructure Fund does. And the other fund is Geranco. Both funds have the same structure. The shareholders are European governments. They are trying to see development within Africa. Both funds are leveraged through a combination of senior debt, subordinate debt, and guarantees from local banks and commercial banks and DFIs. The big difference between the two funds is the currency. So EIF is a hard currency fund. We provide long-term debt to infrastructure projects in sub-Saharan Africa. We financed to date 39 projects, $750 million. Geranco is an initiative that we started to manage 4 years ago, and the idea of Geranco is to develop debt capital markets. So the idea of Geranco is to guarantee local currency debt in less developed countries, have a broader remit than Africa. It can also do less developed emerging markets. But we use this product to promote local currency funding. If we look at the power sector, we financed 11 projects to $200 million. We were the arranger for Lake Kivu Power Plant, which won PFI award last year, and also the arranger for the ADEX bioenergy project in Sierra Leone, so an energy sugar to ethanol project. We tend to take higher risk than some DFIs, so if we look at where we would like to operate, we have terms like DFIs. We can provide up to 15 years tenor, but we take some more risk than a DFI, if I can say that on ourselves. One statement I'd like to make: there is no shortage for good projects. There is a long list of good projects that are actually oversubscribed, where the difficulty arises when we have projects that are not totally bankable, and then the question is, how do you make them bankable? Sometimes you can structure around the bankability issue, sometimes you can't. I'm not going to go through the list what is a bankable project, but I would like to make a few comments about issues that are very important in the project development, and sometimes people don't understand how long they take to solve. One is the environmental and social. We have requirements that all our projects meet the IFC World Bank standards. This takes quite a long time. It's very important to start in the early beginning to look at the ENS issues, because sometimes you need to have publication in local communities, get consultation, and this is a crucial part of any project development. The other issue is local players. I said this morning. I think local currency is important for the financing, but also local developers. You need to understand the politics, the dynamics of the country. It's very helpful to have a local partner, or through a financier or a partner that will help you develop the project. You asked me to give a list of what are the barriers preventing energy deals in Africa, and I'd like to discuss three issues. One is the off-taker risk. Unfortunately, a lot of the utilities which are our main off-takers are not bankable enough, and we need to find structures where they can sustain the number of projects that needs to be developed. And if I will take an example of Kenya, when we look at the first IPP that was financed in Kenya, there was an account which was a collateral account, so all the key customers were paying to a special account set aside to create security, and there was also government security. If we're looking today at the power projects that are being financed in Kenya, we only have certain guarantees or certain requirements that the KPLC is providing, which is the normal practice if you look at the international comparative of PPAs. But because they're trying to develop around 1,000 megawatts in the next 5 years, now this become a too big program for their own financing. So they're going to a program which also is Nigeria is trying to develop, where the World Bank and MIGA are going to guarantee part of their undertakings under the PPAs. We've seen this as a breath of fresh air for projects in the power sector, because if we look from a banking point of view, we can't allow ourselves taking a huge risk on the utilities. And even a functioning utility, which have had a very good track record, and I wish I had few more of these in Africa, but when you try to develop a big program, you need to be able to show to the financiers that you can stand behind your obligation for a long term, because our funding is for 15 years. So one is the off-taker risk. And one other one solution that I was thinking of trying to solve the off-taker risk is by allowing third-party sales. So, for example, in Nigeria, we finance a small power plant where we have industrial customers. So you actually don't need the off-taker to be a bulk buyer. We sold it directly to the customers. But most of the country, again, don't have the legislation to allow third-party sale to industries. The other one is not enough experienced developers. We had lunch today, and I said I can count on one hand how many power developers exist in Africa. We need to create more developers, and to create more developers we need to have local know-how, because we can't wait for all the international companies to show up, because you are competing across the globe with other projects. So how do we create this? We need to maybe facilitate joint ventures for local partners to learn and how to develop projects. I do want to make one comment about local partners. I've seen a lot of projects where we have local sponsors who have a very good idea on how to develop a project. When they come to see us, we said, okay, very good idea, we want to see how you're going to develop the project. They say, I will hire this and I will do that. And we say, we would like to see somebody who already done it. Please create a joint venture with a power developer. And then the biggest problem to create this joint venture is people feel this is their baby, this is their project, they don't want to give away any control or any part of the project in order to gain the knowledge. My personal advice is sometimes you pay a bit premium for your first project, and then the next project you can do it on your own. But the learning curve is so important that I think that there is a merit for kind of giving up a bit for somebody who've done it before, than just not keep the project close to you. And I've seen it happening many times. And then the ability of governments to negotiate contracts. We need to there is a lot of soft money going around to support governments. Some of them are even managed by the same shareholders we have. And if you don't have the proper advice, it takes a long time to achieve financial close. There is a lot of suspicion from both sides. Why are you asking for this type of close? Actually, you're trying to take something away, but if you're properly advised, you understand this is market practice. So I do think that advisory for both sides, for the sponsors and if they haven't done many projects before, and the government, is very important. There is a company called Spencon, and they are a construction company, and they could not compete with the big international players because they could not place the bonds guarantees for their projects. So what we've done, we guarantee their guarantees. We have a backing from Barclays and KfW, so together is AA-. And that provided them the ability to compete with big companies on construction projects. So they had the know-how, but they didn't have the financial strength to be a competitor. So that's one way where we intervene through our funds to support a local player. We've seen other projects where we had joint ventures between a local partner and an international partner. We've seen projects where they have EPC contractors that part of the EPC would be done by local partners. But as I said in the beginning, in my presentation, I think there's not enough, and we need to try and push forward to have more local partners and more local content in these projects. Because if we want to be able to solve the infrastructure gap in Africa. It has to become something which is African.
Doing business in Africa, you can't afford to be without Africa Investor.